Well, let's continue on right now, if we will. Our next guest, of course, the Chief Financial Officer of Yahoo. The shares are the most, or the shares are down 11% here today. Also, of course, Yahoo, the most used internet site out there. This after the company posted revenue that missed analyst estimates. It also predicted that sales this quarter may fall short. For more on that, as we said, we're joined by the Chief Financial Officer, Susan Decker, who joins us now from the headquarters out in Sunnyvale, California. Susan, thanks for coming on Market Line today.
Thanks for having me.
$6 billion out the window with one quarterly report here today. I'm assuming the corner office in Sunnyvale thinks this is an overreaction.
You know, we were really pleased with our results, and they really were right on target with the very, very strong growth that we had predicted. If you go back a quarter, don't forget that when we started the year so strongly out of the gates, we actually raised our guidance for revenue by $175 million at the midpoint, and for operating cash flow by $100 million. And we delivered within those ranges on a very robust forecast. So we were really pleased. We were up 44% in revenue, 57% in operating cash flow, and see those results of validation of our strategy and our leadership position in advertising.
All the numbers are up. Everything's growing. It's just the pace of growth is not meeting expectations. Is there a expectations management problem then?
You know, we really focus on what we can control, which is our growth rates and you know, our business, and then we try to communicate that as transparently as possible to Wall Street. And we delivered right within the ranges on revenue, and we actually exceeded the ranges that we gave out on operating cash flow. So we're really pleased, and you know, it's hard to know what's going on with everybody's thoughts, but we don't spend a lot of time thinking about that. We think about managing our business.
Let's talk about your business a little more closely, and in particular, search-linked ads. Is that market cooling down?
No, the search market is just getting started, and it's only been around for a few years, and it's very rapidly ramping up because it provides such terrific value, both to consumers who are algorithmically looking for things across the web in a random access way, and also for advertisers who are looking for a targeted and efficient and relevant way to achieve their objectives with consumers.
How do you plan to get more revenue from each search on Yahoo specifically? How can you do that?
You know, there's a number of ways that we can do that. We have a number of initiatives to increase the coverage of commercial terms. We have initiatives to increase the relevance of the terms that we serve, which drives click-through rates. And the price component of the equation is really an auction model, so we don't control that one as much as we do the other two. But we have said very clearly that our first objective after we got into the search business about 18 months ago was to maintain and at some point extend our lead on the algorithmic side, and we're really pleased with that. Challenge number two is to figure out how to drive monetization, which is what you're talking about. And about a year ago, we funded a number of operating initiatives, which are some of the most important initiatives of the company this year, and will be publicly in the market in 2006. So we have a roadmap. The game plan is pretty clear, and we're really excited about the future.
What about the fact that Microsoft is suing your cross-county rival Google? Is that going to be good for your business, a distraction for them?
You know, Microsoft is a great partner of Yahoo. We work with them on a number of different levels and also compete with them on some levels. We've always assumed that they would get into this business more aggressively. It's a very, very big business, and as is true in the traditional advertising business, there are usually 2, 3, 4 players that all play in that market. And we have expected Microsoft to get in, and we assume they will. And we think actually that will validate the medium even more than it is today.
Okay, good stuff. Susan, we have to take a commercial. You know what it's like to pay bills. If you could hold through the break, we want to ask you a couple more questions, and we'll get right back to Susan Decker, the CFO of Yahoo. All right, folks, we're back, and we are rejoined by the CFO of Yahoo, Susan Decker. Thanks again, Susan. Let's pick it up again. We were talking about Google and Microsoft and their legal tussle, but you, of course, were shareholders of Google until recently. You sold the stake. Do you think you sold it at a peak at the right price?
Well, you know, it isn't a strategic stake to us anymore. When we originally acquired it, it was. We had a partnership with Google. So we've been very clear that we would be disposing it over time. We sold a little bit in Q3, a little bit in Q4, just a tad in Q1, and the rest in Q2. So it really wasn't, we're not trying to time it around any particular market event. And we're really pleased. We actually made about $1.5 billion for shareholders. That actually funded our entire investment to become a principal in search. So turned out to be good for us and good for our shareholders.
All right, if we can, final minute here to talk about your crystal ball a little bit. What are you doing to pick up new advertising clients rather than squeezing more out of existing clients?
Well, you know, the primary area that we're focusing on new clients is in the sponsored search area. You know, there are hundreds of thousands of advertisers out there using the medium, but there could be multiples more of that because it allows very small advertisers access to consumers all over the web. So we are working on a number of initiatives that would automate the process for them, self-service, allow them to get in front of consumers, and help drive our overall advertisers. I'd say with the branded side, we already do business with all the major branded advertisers out there, the classic Ad Age 100, blue chip kind of marketers. And there we're really just helping prove the medium so that we can get deeper into their budgets. They already spend much less on the web than they do on other forms of advertising, and yet their consumers are spending much more time on the web these days than they are elsewhere. So we think there's an opportunity both to get deeper and also to broaden our relationships with advertisers.
All right, good stuff. Susan Decker, Chief Financial Officer at Yahoo. Thanks for coming on today. As we point out, stock's down about 11% today. It's now down 11%. It had broken even just as of yesterday. The market cap now just about $46 billion.